Hello everyone. In today's video, we are going to explore a critical aspect of trading. Why trading is 80% psychology and 20% technical analysis. This topic is so important because, as many of you may know, only about 10% traders succeed while 90% fail. The question is why? Why did you start trading in the first place? What were your thoughts and assumptions? Many new traders are drawn to the idea that trading can make them rich quick. They believe it's a fast way to earn a lot of money, but few of them stop to think carefully before making their first trade. Have you thought about what it takes to become a successful trader? What skills are needed? What risks are involved? How much you are willing to lose while gaining the experience and becoming profitable? Do you have clear idea of how much you can afford to lose in total or even on monthly basis while you are learning? Some traders think they need to lose money at first, while others believe they can take time to learn and gain experience without big losses. So ask yourself, do I want to learn the art of trading or do I just want to make money fast? If you are in it just for quick money, you will still need time and experience to succeed. Instead of focusing on getting rich fast, why not focus on gaining experience and meeting the requirement of trading? Becoming skilled takes time and effort. You don't need a lot of money to start. You just need dedication to learn. If you have truly decided to become a successful trader and you are willing to put in the efforts, no matter how long it takes, you will eventually succeed. Yes, there will be struggles and challenges, but if you stay committed to learning and improving, one day you will have all the skills you need to be a great trader. And when that day comes, no one will be able to stop you from achieving your goals. Keep learning, stay patient, and the result will follow. Many people start trading and eventually begin study technical analysis. After learning and developing strategies, they often believe that these strategies alone will make them successful. While there are many good strategies with success rate above 70%, do they really guarantee success for all traders? The answer is no. Only a few traders become profitable using these strategies. The reason is that these successful traders have something extra, and that is psychology. Furthermore, technical analysis is only about 20% of what it takes to be a successful trader. The remaining 80% comes from psychology. To truly succeed in trading, it's essential to build and strengthen psychological skills. This includes learning how to manage emotions, maintain discipline, and stay patient. Unfortunately, very few traders put effort into developing their psychology, but those who do are the ones who go on to achieve long term success. Psychology is the scientific study of mind and its behavior. It explores how people think, feel, act, both individually and in groups. Key aspects of psychology relevant to trading include emotional control, the ability to manage emotions like fear, greed, which can cloud judgment and lead to impulsive decisions. Discipline, sticking to the trading plan and following strategies even during difficult market conditions. Mindset, developing a growth mindset that embraces learning from failure and experiences rather than fearing them. Risk management, understanding personal risk tolerances and how to make decisions that align with it. Behavioral biases, recognizing common biases such as overconfidence or loss aversion that can affect trading decisions. By focusing on these psychological aspects, trader can improve their performance and increase their chances of long term. All the psychological aspects like greed, fear, anger, ego, attachment, and jealousy comes from our mind. Most of the time, our mind controls our action and decisions. Often, our brain tries to think logically, but our emotions can take over, leading us to make emotional decisions. Our mind is part of us, so developing our psychology means working on our mind and our inner self. To grow and improve, we need to be aware of what our mind is thinking. Simply being aware of our thoughts helps us to understand what we are doing, especially when these thoughts are emotional. For example, if I notice that I am feeling greedy or afraid, I can recognize those feelings in my mind. But if I let these emotions control my decision, I might not focus on what's happening in the market. This can prevent me from processing information correctly and making informed decisions. By becoming more aware of our thoughts and emotions, we can learn to manage them better, allowing us to make clearer and more rational decisions. In trading, we can say that developing our psychology is really about developing ourselves. To grow, we need to understand what we are currently doing, what might be wrong, what we should do differently, and what our strengths are. Just as we study technical analysis or any other subject to improve ourselves, we also need to study ourselves.